Wall Street opened mostly lower, with Fed fears balancing Russia's bailout. Dow Jones Industrial average 120. By Geoffrey Smith. Investing.com, U.S. stock markets opened mixed to lower on Monday, as fresh warnings from Federal Reserve officials over the pace of monetary tightening took the steam out of a relief rally that followed comments suggesting that war between Russia and Ukraine isn't imminent. Futures had pared their overnight losses after Russian Foreign Minister Sergey Lavrov told President Vladimir Putin that there was still a way forward for diplomatic engagement. That followed a sternly worded warning from G7 finance ministers threatening massive and immediate consequences for the Russian economy if it sends its military across the border. Russian warships are currently closing off a large part of Ukraine's coastline with what it says are naval drills. However, comments from St. Louis Fed President James Bullard ensured that the market's focus remained on the prospects for inflation and interest rates this year. Bullard, who last week said he wanted official rates to rise by a full 100 basis points by the start of July, told CNBC that, "I do think we need to front-load more of our planned removal of accommodation than we would have previously. We've been surprised to the upside on inflation." By 9:40 a.m. Eastern Time, the Dow Jones Industrial average was down 120 points, or 0.4%, at 34,618 points. The S&P 500 was flat, however, while the NASDAQ Composite, which had underperformed on the way down during Friday's rout, was up 0.3%. The market had appeared set to open still under the shadow of the University of Michigan's Consumer Sentiment Survey, which had shaken confidence in the strength of U.S. consumption on Friday. The survey's main index had fallen to its lowest level since 2012 on a combination of high inflation and the fading effects of pandemic-era stimulus. Spending and sentiment are not the same, especially when households are sitting on trillions of dollars of pandemic savings, but it's hard to be very positive about the near-term outlook for retail sales when sentiment has fallen so far, so quickly, said Pantheon Macroeconomics chief economist Ian Shepherdson in a note to clients.